London has lately been ranked as the most crypto-friendly city in 2023. Now, in its post-Brexit era, the UK is taking a step further in becoming a global leader in crypto and blockchain technology. Crypto-friendly Prime Minister Rishi Sunak has also clarified that he's highly determined to make the UK a crypto powerhouse. And to do this, Mr. Sunak plans to introduce a new set of rules and regulations tailored for all crypto companies based in the UK. But could this lead to massive regulation and defeat the point of blockchain technology, which is to be completely decentralized? And will all these regulations backfire by negatively impacting the UK's economy? Crypto has been used for over a decade by companies and investors as a way to profit from its ability to be highly volatile. But because crypto is still considered a new phenomenon, it still suffers from many gaps for it to be considered safe for people to keep their money. The only way for crypto to become widely adapted is based on certain rules and regulations that can support it and make it accessible to anyone. The UK is one of the first countries that are willing to make this possible in the hopes of encouraging businesses to invest, innovate, and create more jobs in the crypto industry. According to reports, Prime Minister Rishi Sunak aims at keeping the financial services sector in the UK at the forefront of technology and innovation. And he believes that the only way to achieve this is by focusing on further regulating the crypto market for the public. At the moment, Sunak's administration is currently planning to introduce a new set of rules that are tailor-made for the crypto companies based in the UK. The main goal is for the governments to shut down the reckless business practices of these crypto companies, which oftentimes profit from the existing gaps in the crypto market today. One good example of these reckless business practices is what contributed to the demise of FTX. When FTX came crashing down, its investors started withdrawing their funds at rapid speed. The problem with the company was that it didn't have enough funds to give investors back their money. This led to many people losing thousands and even millions of pounds. Upon filing for bankruptcy, it was alleged that due to the lack of regulation, FTX might have used millions of pounds of investor money to make risky trades between the other big crypto companies. Money that was never meant to be moved from the investor's account. But FTX is just one of the countless crypto companies that are carelessly playing with people's investments in crypto. The UK government is now hoping that by establishing a new set of regulations for these companies, investors and their crypto assets will be more protected. However, the UK has clarified that regulations take time. They might even take years just to be approved by Parliament. At the time being, the Financial Services and Markets Bill is still making its way into Parliament, and if these regulations do get approved, they will contribute to making the UK's financial sector be more competitive with the EU. Although London is on its way to becoming a crypto powerhouse, other cities like Dubai and New York aren't too far off from becoming global players in the crypto space. These are currently the top 3 cities in the world that meet all the 8 important factors of being considered a crypto hub in 2023. Some of these factors include ATMs, job opportunities, taxes, and events that are related to crypto. A recent study analysed 50 of the world's most developed cities that are currently supporting the widespread use of crypto. London took first place, while Dubai and New York took second and third place for the acceptance and use of crypto. But as the UK is currently supporting the widespread use of crypto, they are also aiming to take another step forward in creating their own digital pound. At the moment, this form of digital currency unveiled by the government and the Bank of England remains a concept. Nicknamed Britcoin, this form of digital currency might be issued in the hopes for the UK government to remain in power in the financial sector. Unlike the normal way of depositing hard cash, Britcoin will only be stored in electronic devices and directly transferred from one device to another. It will also provide the citizens of the UK with a more stable and secure form of digital assets. City Minister Andrew Griffith explained that Britcoin and traditional paper money will both be available alongside one another. But there is still one big concern with the fact that the government is trying to introduce layers of formality to the crypto sector. Cryptocurrency was initially created with the purpose to be decentralized. The biggest innovation of crypto is that it doesn't rely on banks or governments to deauthorize transactions. Instead, it relies on its users to verify transactions by solving complex mathematical problems in order to mine new coins. This system lets people send money anywhere in the world without having to deal with banks or governments at all. However, more than a decade after, complete decentralization has caused them to cause market manipulations, making crypto an unsafe space for people to store their money in. Introducing a set of rules and regulations might strike a good balance between providing user protection while also letting the market develop freely. But not everyone is so keen on the government's intervention in the crypto sector. Many people believe that this will allow the government to gain power in something that was specifically made for the opposite purpose. It's still unpredictable how everything will come into place once these rules are installed for these crypto sectors. Hopefully it will turn out good, and these rules will make it easier to detect pump and dump scams and fraud, which is one of the biggest problems with the crypto market faces at the moment. But many still continue to believe that the financial change is coming and cryptocurrency is the answer. It's a bold statement to make, especially when you consider that the fact that cryptocurrency has only been around for about 10 years. But it's not just about the cryptocurrency itself. It's also about how it can change how we think about money itself. The sudden rise of cryptocurrencies has created a lot of hype and confusion. The hype is all about the massive potential for profits that these digital currencies offers, but not everyone is aware that the fact that cryptocurrencies also have the potential to benefit society. The use cases for cryptocurrency are endless, and implementing a set of rules and regulations can help benefit society in more ways than one. One good example is that it can help with financial inclusion. As more people get access to the internet, they will want financial services such as loans and credit cards. These services can be provided using cryptocurrencies, which are borderless and censorship resistant. Cryptocurrency platforms can also help governments save money by reducing the costs associated with printing currency notes and minting coins with precious metals. This will also reduce environmental pollution caused by mining operations or transporting heavy metals across long distances for recycling purposes. Another benefit that they provide is the ability to store wealth securely without having to trust any third party. This makes cryptocurrencies ideal for those who do not have access to traditional banking services or cannot afford them because they're from developing countries where financial institutions charge high fees for their services. One great example of this is Venezuela and El Salvador. Both countries are already utilizing cryptocurrency, more specifically Bitcoin, in order to try and tackle hyperinflation and the collapse of their currency. Venezuela is suffering from hyperinflation, which has caused the country's fiat currency to lose its value rapidly. This has led people to turn to Bitcoin as a store of value and a safe haven for their wealth. Bitcoin is also being used as a means of exchange throughout the country. The Venezuelan government has even been trying to ban Bitcoin mining activities because they see it as an activity that takes away from national revenue. El Salvador is also suffering from hyperinflation, but they have not taken the same steps as Venezuela. Instead, in September 2021, they decided to embrace cryptocurrencies such as Bitcoin by making them legal tender in their country. This means that anyone can pay taxes or buy goods with Bitcoin and other cryptocurrencies without having any issues with their government or financial institutions. At the moment, cryptocurrency is still considered risky because it's a nascent market and not as mature as other capital markets. And there are tons of scams out there. Cryptocurrency trading also involves a lot of risk because the underlying assets are volatile. They can fluctuate wildly in price, and sometimes in just seconds or minutes. This makes them unsuitable for many investors who want to trade them like stocks or bonds. In addition, cryptocurrencies are hard to evaluate because they're not backed by real assets or companies. But given the rising cost of living, inflation of prices across the UK, and the National Health Service on the brink of collapse, it is probably fair for the UK to focus on making the crypto space a safer place for people and hopefully boost the country's economy. Do you believe that implementing such rules and regulations on crypto companies will improve the UK's financial sector and make it more competitive, or will it further prevent people from living in a more decentralized future? Share your thoughts down below. Don't forget to like and subscribe if you enjoyed this video.